Most people look at a Toronto investment and have no idea if it's actually going to be making them money. What we're going to be doing today is we're going to be breaking down a Toronto investment property, showing you real numbers, showing you a pro forma and how we ourselves look at investment properties and really analyze them. I'm Bawanka with the Compass team.
And it's Safraz with the Compass team.
And today we're going to be talking about Toronto investment properties. And the three biggest things that we do want to cover is going to be the cash flow, also the appreciation that's going to come with it. But then we're also going to dive into the missing numbers and what people overlook when they're looking at investment property. Now, Safraz, you've owned many investment properties in Toronto. What would you say is the most important thing to you now when you look at it compared to when you first started looking at an investment property back when you were like 19 years old?
Yeah, back then it was very different. So back then, cash flow, of course, you're like, I don't want to, cash flow meaning what comes in is better than what goes out, after all expenses. Definitely look at that, say if it was a couple $100 here and there, but we were so focused back then on appreciation. Why? If you look at the Toronto market up until very recently, year over year, basically guaranteed like 10%, 7%, 15%. It was appreciation focused. A lot of investors in Toronto real estate who, did make their money were appreciation focused. Whereas now, in today's market, with the prices the way they are today, it doesn't really make sense to say, you know what, I'm going to eat negative $1,000 a month cash flow and hope for appreciation. It's a different conversation. Whereas now I'm like, I want to put as little down as I can and try to cash flow as much as possible. And if appreciation happens, fantastic.
Yeah. I remember it was 2015 when I bought my first property. It was an investment property. I didn't know Safraz at the time. I wasn't a real estate agent at this time. And all I just knew is like, if your home is like making $0, like just even, you're doing good. That was like, okay, that's the goal of what you're trying to find. If it's negative 100, negative 200, negative 300, that's okay. And if you're positive 1, 2, 300, you're killing it. You're doing great. Yeah. Take it and run. And again, 2015, this is a different time. Now, again, same with Safraz. With everything that we know, we are more cash flow focused because we know appreciation is going to come with time. But if you've watched a lot of our other videos, a lot of times we don't really talk about selling investment properties unless you have a really good reason to. So let's kind of jump into our pro forma and really break down a pro forma, and we'll be talking about different bits as we go. Again, throughout this, if you do have any questions, throw them in the comments below. If it's something that you like and you hear something you never heard, give us a thumbs up. We like that. And at the end of it, if you're liking what we do, subscribe because we're always putting out content to help you better understand real estate and make you more money. That's our goal. Yep. Because we are investor focused real estate agents. Okay, so the property that we're going to be talking about today, this is a live property. We actually were just running numbers on this like 2 days ago. And this property this is for Airbnb use. If you haven't, go check out our playlist of Airbnb. I'm also a property manager and own Airbnb properties as well. Safraz too. But let's talk about, okay, so we're buying it at $625,000. The actual one is listed at $650,000. I'm sure we can get it at $625,000. Now, let's first give an example of if you were not doing an Airbnb and you were just going to be renting it out. We'll run numbers like that first. Those numbers are not as good, but again, this is going to be majority of condo investments. That's what they're going to look like. So $625,000. Yep. What would you say you're going to be able to get rent for something like this?
This unit specifically has parking. So in that building, let's say generally speaking, you're looking at about what, 25 to maybe 2,700 on the high side.
Okay, so 25 to 2700 on the high side. That's what you're going to be getting if you rent it out to somebody and they move in all their furniture and they live there for a year, 2 years, however long
Whatever,
they end
maybe,
up
yeah.
living there. It's a contract for at least 1 year.
Yeah.
We're gonna talk about that actually at the end. We're gonna talk about the pro forma that we have set up with all of our numbers, and the monthly cash flow that you're looking at when you're doing short term is actually gonna be $5,000, which is a lot more than, it's pretty much double what you're looking at before. Now you have to understand there's a lot more things that go into this, where it's going to be, you're going to need a property manager. If you're going to do it yourself, you can do it, but good luck doing that and having a full-time job at the same time. It's going to be very, very difficult, especially if you're new and you're just starting this out. But yeah, $5,000 is what you're going to be bringing in. Now let's go through the operating expenses.
So the operating expenses, it applies to both, right? So whenever you buy a condo, besides the mortgage, of course, there's a mortgage, but besides the mortgage, generally speaking, the largest expense is the maintenance fee, right? It's month in, month out. For this one specifically, I believe it's 862. You have to pay insurance. You have to get Airbnb insurance. You have to pay for internet. You have to, we'll talk about the management fee as you said. So all these expenses are, besides the mortgage, come up to $1,349 a month.
And in terms of the management fee, it's already been deducted from that $5,000. So you're actually going to be making more than that, but with management fee, expenses, things like that, your monthly income is going to be roughly $5,000 every single month.
Okay, so before we dive a little deeper, so the 5,000, which we're talking about, what has been deducted from that? So people know, right? Because they might look at this and say, you know what? Now I have to pay property management. I have to do all these other fees. Do you want to talk about it now? Or?
So basically everything, $5,000 is what you're going to get after everything's already happened. A lot of times we have revenue of, $8,000, $9,000. We've seen for a unit like this over $12,000. So $5,000 is what we're saying for throughout the year. Annualized is you're going to be getting $5,000 every single month, but there's going to be months where you're making way more and there's going to be months where you're making less. Now, there's going to be a property management fee, there's going to be a cleaning fee, there's going to be a laundry fee, but after all of these are already included, now you're taking, it's going to be $5,000 a month.
So
annually.
Yeah, so basically this 5,000 on May 1st is what I would receive as an investor. I get 5,000 and it goes in my pocket and I have to deal with the other stuff outside of Airbnb.
Exactly.
It's as if my rent was $5,000.
Exactly.
Okay.
Yeah.
Just want to clarify that.
Yeah. So now we get into the operating expenses that you just touched on, and all of those are gonna be $1,350. $1,350.
So 5,000 minus 1,350 before
your
mortgage payment.
Now,
Perfect.
mortgage is gonna be one of the biggest things. So let's talk about let's say you're putting down 5%. A lot of investors, we've talked about it in other videos. If you can put down less.
Oh yeah, absolutely.
Because then you're gonna be able to buy another investment property later as well. So you're looking at 37,500, give or take a bit. And that's what you're going to have to be putting down as your down payment. Other thing is going to be like land transfer tax. If you're a first time home buyer, you haven't bought before, that's going to be about $9,500. If you've bought before, it's going to be double that. Legal fees, again, these are closing costs. It's going to be about $3,500.
Yep.
And then you have to set the place up and get it ready for Airbnb, and that's going to be roughly $17,000. All in all, you're looking around $60,000 for that. And your monthly mortgage is going to be about $2,700.
That's right. So with a 5% down, your monthly mortgage is going to be $2,700.
Mm-hmm.
Okay.
Yeah. Now, if you're putting 20% down, now you're going to be probably around like $2,200, and your income goes from, instead of from 930, it jumps up to about 1500. But the other thing too is like there's parking and there's a locker, and you can rent those out as well. So all of these numbers, that 930 should actually be like 1230,
Yeah. Okay.
or even 1200. 1200 is a fair number. So I mean, that's a lot of money. We said 100, 200, maybe 300 is good. That's a lot more money. And even for like something, a property like this, you're getting it in the downtown core. Again, if you've watched our videos, condos are on sale right now. It's a great time to buy a condo right now. So you're buying a condo at a deeply discounted price, and you're bringing home about anywhere between 1,000 to 1,500 to 1,700, depending how much you put on it.
Yeah. So I will go as far as saying this: in the last maybe even 10 years, it's probably closer to the 10-year mark. There is no downtown condo that would cash flow at 5% down, get up guaranteed 0 and 5% down. Okay, at 20% down, maybe like less than 5% of them will cash flow. Like, no, I'm saying, like, I'm just being hopeful because maybe there is someone saying, you know what, I put 20% down and it cash flows.
Yeah, but
it's so hard.
Put 20% down a
long time ago, exactly. We're including those. But if you're just buying it at market at 20%, no chance at all in Toronto over 10 years. We're talking 2015 and 16. I've been a real estate agent for that long, and I know for a fact that it is close to impossible. When people say, back then even, they say, I want a cash flow, I just say, then you can't be at a condo. But we're talking about a condo in downtown. And downtown's big. But we're talking minutes, okay? Minutes away from the CN Tower. Literal minutes. And minutes away from Scotiabank Arena, minutes away from, the Gardner. It's minutes away from everything. It's not a bad, location somewhere far out. It's in the heart.
Yeah, this is like one of the best locations that you can get. And again, that's why you're able to make so much money, because there's so many people traveling to Toronto. Toronto is a world-class city now. And with all these people traveling here, they need somewhere to stay. There's no new hotels that are being built in the downtown core. So if we know no new hotels are being built, then where are people going to stay in this world-class city? People always need a place to stay. Sometimes whenever we talk about Airbnb, people ask but what about vacancy? How do we know people are not going to be coming here? I've been in Airbnb since 2016. The only time ever, always as a manager, we've always had over 90% occupancy. Always. I have numbers, I have everything to prove it to you. The only time ever, one time ever, you wanna guess when it was that we weren't able to have that occupancy?
No.
Pandemic.
Yeah.
Other than that, there's always been people traveling. There's always people coming to Toronto. So unless something catastrophic like that happens, it's gonna keep running.
Yeah, and you could say the same thing, right? Like when you're saying rentals, like if you had a property that you own, rentals, if you had a new tenant trying to come in, it was really hard during that time. So it wasn't just Airbnb was having this. It was just actually everything, just in general, and that was definitely unprecedented. Hopefully, fingers crossed, we never see that again in our lifetime.
Yeah. No, for sure. The other question that people always ask when it does come to Airbnb is like, what if the city makes rules and what if the city just shuts things down? Then again, it comes back to there's no new hotels that are being built in the city, and where are they going to be built? And again, like I told you, it's a world-class city. People want to come here. If you say no more Airbnbs, all of the hotel prices are going to double or triple. They're going to be so high, which is going to there's going to be way less people coming here. And that's not good for Toronto as a city.
Yeah, if you really think about it, with any new tech innovation that comes to Toronto, we talk about Uber, you're talking about Lyft, you're talking about all these software. Initially, they did have their challenges. Weren't allowed. You could only do this, that, and the other. But I think it's all integrated now, right? It's all integrated. We didn't have many rules for Airbnb, but there are rules now, which is great, and it helps manage it. But you have to think, right? If City of Toronto comes out and says, no more Airbnb, Where are, 10,000 people per night going? There's not that many hotels to downtown Toronto. We can't even capacity like that capacity. We can't do it. So Airbnb will definitely continue. People said the same thing about Uber 10 years ago. Look where
Yeah.
we are now.
No, for sure, for sure. And again, we don't want to. This is about how to analyze
Of course, yeah.
an investment. We don't want to, keep telling you about Airbnb. We do strongly believe in Airbnb as an investment because you can make a lot of money with it. But again, it's just that top number that says monthly rental income. Whether you get a duplex, whether you get a triplex, whether you get a fiveplex, whether you get a tenplex. It doesn't matter. All that matters is that number will change. Right now it's at 5,000. And if we went and say we just rented it out as a 1 year lease, that number is going to say 2,500, 2,700.
Yep.
And that is going to change that bottom estimated net monthly cash, and it's going to go very low. It's going to be in the negative. And when you're getting an investment property, you don't want a negative in front of it, especially when it gets to like negative 700, negative 1,200. You don't. That's not what you don't want to be paying that money every single month into this property.
Yeah, and if a lot of people did do that, right? For the last couple of years, they said, "Hey, I'll eat the negative 1,000." Then what I learned recently, you go from being an investor to you're just speculating.
Yes.
You become a speculator.
Yes.
You're speculating that this asset is gonna go through the moon, and this is the numbers that we see on this pro forma are realistic, factual. What you'll get on average every single month. Now you become an actual real estate investor.
Yeah. So now when we talk about speculation, now we can talk about, okay, there's appreciation that's going to come with this property as well. Now in Toronto, over the last 40 years, the market has gone up over 6.5% not every single year. It doesn't just go straight up like that.
On average.
We go up, down, up, down, up, down, but there's a line. And right now we're actually below the line. So this is why you can see like we're in a good place right now as a buyer. But again, appreciation is something you want to think of. But if you just start banking on it, I'm going to buy this, I'm going to sell it in 2 years, and in the meantime, I'm going to be making some cash flow. I'll make 24,000 in cash flow, and then I'm going to sell it for more. Now you become a speculator, and you're not investing anymore.
Exactly. So we said about myself and many of our clients, we switched it where we say focus on the cash flow. Number one. And if the appreciation happens over a long period of time, because we recommend holding properties for a long period of time, fantastic, call it in. But your main goal is still the cash flow. But when the appreciation does happen at 6.5% on average, it will be nice, and it eventually has to happen. Why? We were saying there's no new hotels being built in Toronto. In downtown Toronto, the amount of new condos coming up, very, very little. And now, in 10 years' time, there's no more space anyways to do that. All the parking lots are already purchased, are already primed for building, and many of them are already even completed.
Yeah. So the reason that we showed you this exact pro forma is because the price is low, relatively low. We live in Toronto, Ontario. This is what it costs to buy. Now, if you want another type of investment property and you still want to be able to get $5,000, you have to understand the price is going to be going higher. The price is going to be going closer to like 800,000. Now you might be cash flow positive $50. Like you're not really going to be making that cash flow, but it's a different type of property. Again, now you have more things that you might have to deal with. You might not have a property manager anymore. And again, you're going to get a lot farther from the city. Probably we're talking an hour and a half away from the city.
Yeah.
So this is a different type of investment. That's like a duplex, maybe a triplex in London, in St. Catharines, something like that.
Yeah, and a big thing about this, the biggest pro of this is that it's a condo. You don't have to worry about the roof. You don't have to worry about the windows. You don't have to worry about so many major factors that people forget to consider when they're looking at these properties far away, is that this is a condo. Many of the stuff It works. It just works. That's why you pay your maintenance fee, and things just work. And there will be minor things, but it's not like, hey, you know what? There's a leak in the roof. I need to spend $20,000 to fix that. Oh, my furnace just broke. Happens. Shit, it happened to me last year. Furnace broke on like December 27th, and I'm like, oh my god. First of all, it's freezing, and I need a furnace today, and everybody's busy, and it took like 4 days of having no furnace and $4,000 because it's not like in the summer you're buying a furnace. So all of these things you have to consider. This is low maintenance, right? What can go wrong really is what's inside the unit. Nothing major and expensive. Two things.
Yeah. So another question that people always ask me, well, these are just random people. They're gonna ruin my place. They're gonna destroy my place. So now, in all of my years, okay, I've probably seen 2,000, 3,000 guests come in and come out. The most damage that I've ever seen, was there's a sliding door, and the bottom of it, it was a mirror. The bottom of it broke. This is the most damage I've ever seen. That's not to say one time we had a broken bed, Airbnb refunded that. There's been a broken couch, Airbnb refunded that. Some things do happen, but you can also get refunded for it. That's the good thing. Again, now if you want to know more about this, we have a whole playlist that's catered towards Airbnb investment. Go look on the Compass team and just look and go find in the Airbnb playlist, and you're gonna learn so much more about it. We did a whole presentation on it that was about maybe like an hour long. If you go to that presentation, we go like really deep. You're gonna understand everything about this investment.
Yep. And for me, now that I've been in the game, having my own rental properties, this, that, and the other, one of the main reasons that I personally jumped in was because I was tired of having to manage all these properties myself. Having, Sunday, 11 p.m., true story, toilet is clogged. Okay. Now all the toilets in the whole house don't work. At 11 p.m., what are you going to do? I said, I don't want to deal with this kind of stuff. Let's go into this low maintenance. That's why I said it before. For me, that's one of the biggest things. Cash flow and low maintenance. It is very tough to find in Toronto, but that's why we have this proforma to explain that it is possible and very profitable.
Yeah. Okay, so let's talk about the missing numbers. What are missing numbers that people might be missing?
So for me, I'm an investor. We look at this all the time, and one thing to always keep in mind is that this number that we're seeing, it's 5,000. It's Airbnb naturally, like in Toronto, has a high season and a low season. Right? This number that you see here, 5,000, is an average of the annual, meaning your gross rental income is $60,000. Doesn't mean you'll make 5,000 every month, right? Maybe in November, maybe in January, February, you might not make 5,000, but we've annualized it, right? So you need to understand that part. I think that's really important for investors, right? For that month, example, let's talk, realistic examples. If it's January, December, there's of course for Christmas a lot more people come to Toronto, but in January there's not many things happening. So in actually your pocket you might not get that 5,000. So you need to be able to manage. But same thing, right? If you're a smart investor, and we'll explain that to you at the time, is maybe June, July, you might get realistically in your pocket a lot more.
Yeah.
Right?
Yeah.
And it's
again, like I said, you've seen 11,000, 12,000.
Yeah, I saw one, 11, 12,000. And if you're like, okay, I made 12,000 this month, let me put it in my pocket and go spend it.
That's revenue.
Don't do that.
Revenue. Yeah. It's not 12,000 coming into your pocket, but yeah.
But what you come into your pocket, of course, you need to understand that this is an annualized number. So you're going to get 60,000 for the year. Okay, so there will be ups and downs naturally with the seasons, but budgetary, for budgeting, you need to keep that in mind. I think that's really important.
I think another important thing to think about is we talked about if you're gonna get a duplex. If you're getting a duplex an hour and a half, 2 hours away from the city, most likely you are gonna need a property manager, and there's gonna be a fee for that. And that's not included kind of in those numbers that we were talking if it was to be 5,000. Now, another thing too is, let's say you say, you know what, I would just want to get something like this, but I would just want to rent it out for 1 year lease minimum, and just go from there. Now another thing, a missing number here is there's gonna be a realtor fee. There's gonna be a fee to be able to get it rented out. And the industry standard is going to be 1 month's rent. Yeah, half goes towards our brokerage, half goes towards the other brokerage. So that's something that you got to think about as well. Is there any other missing numbers you could think of?
We talked about the vacancy. So the biggest question is, whenever you talk to people, it's vacancy. Am I going to make this consistently? So we talked about those two things. And what I like about the reason why we use the 5,000 number is it deducts everything, as Blanca said. And those are usually what people don't talk about, right? They say, yeah, in July you made $15,000. Fantastic. That's revenue. Great. Tell me about what I'm going to have in my pocket. So we've simplified it for you. But again, if you want to know what the top line looks like, it's definitely worth a call to discuss it.
And keep in mind, this is for a specific unit that we already have. Everything is ready to go for it. It doesn't just mean, hey, I can find a place 625. This one is the way that it's set up. You're able to maximize the space and really get the most amount of guests in there, which will in turn help you make the most amount of money.
So, to your point, it's not like you could buy a condo for 625 in Scarborough and say you're gonna get these numbers. Absolutely not. Very different. This is a very specific micro market where the building demand is high. It's in literally, I would say, in Toronto. The only, if you wanted a real scale, it's 1 out of 1,000 condos for this specific use case scenario of Airbnb. If you say Etobicoke, Scarborough, Airport, this, that, and the other, those numbers change drastically. Yeah. Even if you bought something for 625.
Yeah. So now, again, if this is something that you're interested in, if you want to see the exact property that we're talking about, reach out right away, send something in the comments, or click the link below, set up a discovery call, and we can share it with you and we can help you better understand these numbers. Is there anything you want to leave the people with before we go?
I would say one thing is, before I did dive into it, we had numbers, but it wasn't as solid. Now we have solid, real, factual numbers for a long period. Right? Everybody talks about, hey, I'm going to do Airbnb, and no one's a believer. But once you sit down, see realistic numbers, it made me a believer. And I'm usually skeptical until I get into it. So I would say keep an open mind. And these are conservative, factual numbers. It's 100% possible for this situation to exist for you.
Yeah. And again, for me, I have 10 years experience doing this. I know it. Safraz, you got a little over a year. With your experience, you're a believer now.
I'm 100% believer, yeah.
Okay. Well, yeah, if you want to understand more, if you want to know more about it, click the link below. If you have a friend who's thinking about, hey, should I get an investment? Should I get a place for myself? Share this with them as well. And again, I'm Bawanka with the Compass team.
And it's Safraz with the Compass team.
And we'll see you guys on the next one.